Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, September 4th, 2008. Well, what an unbelievable sell-off day in the markets, folks. And we saw the indexes just plunge, and it really was never any sort of major bounce in the market. It was just continued selling all day. A little bit in the afternoon, you got the first touch of the 20 moving average, which was unique in itself that it took that long to hit the 20, but that just showed you how much volume on the sell side there was today. And volume was extremely heavy, probably the heaviest day in a month and a half at least in volume, as people just dumped everything. Now, what caused today, folks? And we're going to look at that in the video, discuss key levels, because we obviously broke out of that channel we were in. And that was the key channel we were watching and staying in that neutral stance as long as we were in that key channel. Now, we had talked a little bit about a possibility of a move next week to the positive side, starting maybe on Monday or Tuesday. That's still up in the air, but we are going to dissect the charts to see exactly where we are. There is a key level in this market now that has to be watched, and we're going to cover that in today's video. If we regain that level tomorrow, then we're still in play for next week. If we do not and we continue to confirm this move to the downside, then we have to reevaluate and look for a next consolidation or possible move down in this market. So just a fantastic move across the board to the downside today. Those in the chat room know how volatile this market was and how much the selling just kind of came in. You'd have like a couple candles where you'd pause, and then a huge amount of selling comes in and just slam the market down. And this happened 10 times today at least, it seemed. But long story short, folks, the Dow was down about 345 points, the NASDAQ was down 75, and the S&P was down about 38. Across the board, this was about 3% or more in the markets, and that's a major sell-off. One thing I did note, folks, from Tuesday, remember Tuesday we had that gap up in reversal where we closed basically flat to negative? From that gap up on the NASDAQ is down about 8% from that Tuesday high. That's a huge reversal. I mean, just think about that, folks. A 7 to 8% drop from that high on Tuesday in a matter of, what, 3-4 trading days? You know, that's all it really was, really just 3 trading days from the high. And that is unbelievable. So again, we're going to look at all this stuff. Let's get right into it, as this is a very volatile day. And you can see right here, folks. Now, what happened today? Because I want to talk about the keys to the drop today. What at least was the market attributing this to. Number one, you had the ADP report of jobs come out at 8:15. You had retail sales coming out left and right. And these were all not so great numbers. Walmart was really the only bright spot. But in a recession, you obviously would assume Walmart would do better than some of the higher-end retailers. So that right there shocked the markets to a little bit. You also had a drop in oil continuing today. And we really saw when those inventory numbers came out on natural gas at 10:35 and 11 o'clock on crude, that's when the market really started to gather steam to the downside. And what was going on again is this global recession fear, and it is getting crazy out there how scared the markets seem to be of this global recession. And it's, valid. In all fairness, it's valid. I mean, there's definitely a slowdown going on not only in the United States, but across the world. And again, it may be starting with the United States and spreading, who knows, but in any case, you have to assume that the markets are very panicky about that, and you saw that today. So I want to just point out here, folks, you had the market trending down. Really, here's the open in the markets, right here, right? Markets open right here. This is 9:30. You had a little bit of a trend down earlier from that ADP and the retail sales coming out. Then you kind of are trending sideways into that number, right? All right, you have that natural gas number. And this is really interesting because it really started right at that 10:30 time frame. Look at the sell-off that started, and after that, it was just continuation all day long. All right, you sold right all the way to here, and we can even draw a little bit of a channel in there, and you can see how that's basically was just a sell all the way in a channel. Then this is the interesting thing, and we were talking about this in the chat room, which, by the way, you all should come join for the learning experience in the very least, was how the markets for all day had not hit the 20, and that's a very big sell day, and continued sell day when you don't hit the 20 all day. And we were talking about how the likelihood is before the end of the day, because I don't even know if I've ever seen a down day where we didn't touch the 20 at least once on a 10-minute chart. But sure enough, you finally got that right around 3 o'clock. You had a little spike up into the 20. This is the only really trading pattern that was a definitive trading pattern in the markets where you could play it off of. First hit of the 20s, a shorting opportunity. You came down, made a double bottom in the market. In fact, you took out the lows by a tick, and that's really where we ended. We ended right off of those lows on this market. And an unbelievable, again, sell-off in this market. But more than anything, folks, we have to go to the daily charts to scope things out and figure out where this market's heading, because that channel that I've been pointing out for now, it seems like weeks that we've been in, has now been broken to the downside. So let's go to the SPY Daily and draw our channel in. All right, here's the channel. Let's draw that in. We know we tested it to the downside yesterday before they recaptured it to the upside. Here's the upside of the channel. All right, this is what we had drawn in for probably about since really over here or so. We had drawn this channel in on the videos, and you can see the volume surge. And I want to point this out as well. Look at the massive amount of volume today. All right, I'm just going to draw it over so we can kind of see when the last day was that we had this much volume. And it really looks to be this day we did the same amount of volume. Before that, it was right over here, which is a long, long time ago. Also note when that was. It was the bottom in July that we did, more volume. That's the last time we did more volume than today. So what I'm saying here, folks, is we've broken to the downside. Now, the key about this is, folks, if you take this, and let me erase this point so I can draw this in. If you take this point right here, and you take the bottom of today, or just about the bottom, we are a little lower than that, and I'll give you the exact numbers. All right, if you take the exact numbers, and we'll talk about the S&P more than anything here, this from the low is just slightly more than a 0.618 retracement of the up move. All right, so from here to here, the retrace right now that we closed on today is just slightly more than 0.618. On the S&P, I believe it's 1243, and you can go to inthemoneystocks.com and go to in the daily market report, and that has all the numbers, the key numbers laid out in words, so you can really read them as you're watching these videos, which is very, very important. But the key here, folks, is that we broke down, we came a little bit below that 0.618. Tomorrow's going to be the key. We always talk about needing confirmation. The same thing applies here, okay? You broke out of the channel. Can we confirm it tomorrow? Now, what if we start to head back up? Well, we didn't confirm it then. Then we look at this as being resistance. If we get past that, we're right back in that channel. We confirm this to the downside, then all of a sudden, in our opinion, now we're talking about a possibility of consolidation next week instead of a move up, and then possibly retesting the lows of July and maybe lower. All right, so that's how key tomorrow's going to be. And and the key here, folks, is again, you want to see whether or not this is confirmation, because if we move up a little bit and recapture the 0.618 retrace, then all of a sudden you have to look at next week as possibly having a move back up after a 0.618 retrace of the Fibonacci. Okay, and that's the real key in this market. This is everything you want to pay attention to on this chart. You want to focus on this line and the bottom line, the retrace line here. We are a little bit below that on the markets. But very, very small, a little bit below. Really just a few points on the S&P, maybe 5 points or so, maybe 6 points below that 0.618 retrace. Should we recapture that? And there's a key economic data that's going to be volatile again, and this market is prone to these major moves apparently this week. Between the reversal of the major gap up on Tuesday and reversal to today's volatility, no wonder this market's just off the hook. But what you're looking for tomorrow, you got the jobs number, the unemployment number, I believe, comes out at 8:30. The market's really awaiting that. If that comes in better, and you are looking at a little bit of a near-term oversold situation here, then we'll see. All right. However, if it comes in worse and you see the market close here, anywhere in this range, then you're obviously talking about Monday, Tuesday, instead of being possibly an up move next week. We all of a sudden are now talking about consolidation and another move down. Okay. So it's everything to do with this chart. Now, the key on this NASDAQ, folks, I'm going to flip to the NASDAQ Daily, is that they didn't even wait for this to bounce off a support. Here's support yesterday. We talked about it being support. They didn't even bother going through it. They just gapped the market down and continued to push it lower. They gapped the market down, slammed it down all day. NASDAQ closed at the low. All right, you can do the calculations here again to figure out what retrace level this is. It's probably approximately that, but I haven't done the calculations on this one. But either way, just an ugly day on the NASDAQ. And then again, the NASDAQ down something like 7-8% from the high here. All right, from up here, which was the gap up Monday, to this point, that's 7-8%, I believe, of the overall index in a matter of really just 3 trading days, Tuesday, Wednesday, Thursday. Very, very unbelievable, but absolutely happening out there. And again, the global recession is what's driving this. You got really... Now, this is the unique thing I wanted to talk about a little bit today, is that when oil was above 130, and whenever oil went up, it caused a sell-off, right? Once oil came below like 115, it's causing the same reaction. And it's because of the global demand issue. But either way, it's almost like if you could pick oil to stay in the 115 to 120 range, you'd actually see the markets stabilize and start moving higher. It's that when you have this major decline in commodity bubble bursting and almost a commodity recession, if not depression right now, where things have just gotten killed, that's the key. Now, I will point this out, folks, and I'm going to go out on a little bit of a limb here. The dollar index paused here at resistance. We had called this resistance in these videos. Finally broke out after a while, and look at how you needed the 20 moving average to push it higher. The 20 moving average came right out. You broke up. Now you're coming into some very significant resistance on the dollar index here. All right, and we are saying that maybe a tiny bit higher, but you're now looking for a pullback on this dollar index in the near term. So be ready for that. If that happens, you may get a bounce in oil, you may get a bounce in natural gas and gold. We're going to start to watch that very closely, all right? Just keep very close eye on that going into next week as well, okay? All right, that's a very unique chart. We can look at the dollar chart as well. Look at the GLD. Let's look at the gold on the daily as well. You can see that gold is now inching to a double bottom possibly here. So there may be a little more downside, but I think we are getting near a bouncing opportunity for gold and the USO and natural gas. The UNG obviously is getting close. It may not be there yet, but a good reversal today for the second day on the UNG. This is the UNG chart, folks. And look at this murder. This is literally a catastrophe. There's been a lot of funds that have been going out of business that were betting on this wrong. They should have listened to our videos when we called the top at 145 to 147. All right, folks, enough of this crazy day. We'll be back tomorrow with a new video and analyzing tomorrow's key move in this market. Have a wonderful evening. Join the chat room. Join the Swing Trade Alerts. Take care.